as an investor building a portfolio of $11 million across 8 properties in the last 5 years. What was that flicker to switch to suddenly buying 6 more properties?
The figure itself was not something that I was very fixated on, and I was more fixated on the value of the properties as opposed to the number of properties.
Is this what you originally envisioned your portfolio would look like from the start?
What happened was that once we bought those properties, we were then able to get a quick 30, 40, 50% boost in a short space of time.
I used to not believe in that strategy going back pre-2020, and I decided to look into it further.
You need to take the emotion out of it. What would they pay a premium for? What are the things that are important to people?
It doesn't make sense on all properties. It actually is the one that doesn't look the prettiest out of all the ones you've purchased. Business owners and high-income professionals, this episode is for you. Today we chat with Aman Sethi, a client of ours at InvestorKit, on his journey to building an $11 million property portfolio. He's a business owner who's actually also partnered with an Aussie icon, Brett Lee, famous cricketer and fast bowler, and a global superstar. On this episode, Aman's going to take us through the mistakes and the successes and the tips he has in building such a high-performing portfolio. Let's jump right into it.
Nerd alert! Property Nerds, the home for data-driven property investors, where we uncover Australia's hot and cold markets, latest headlines and trends.
Aman, welcome to the show, my friend.
Thanks, Arjun. Great to be here.
I know we've got a special story to jump into today about your journey with us as an investor building a portfolio of $11 million across 8 properties in the last 5 years with us. But before I go into that, could you tell us a little bit about, what you do, the journey you've been on in terms of your profession, your business, because I'd love to share a bit more about that as well.
Awesome. So from our side, Arjun, we've been in business for about 8 years now. So with Jigs Australia, we've got 2 business arms. So one is the immigration side, where we do visa advisory for a lot of other businesses as well as individuals as well. Covering all the spectrum of visa applications, whether it's business sponsorship, partner visas, skilled migration, the whole remit really, along with complex cases as well. And so we've got a team of lawyers and agents that handle that for us. The second part of the business is more on the recruitment industry and job search coaching. So we work a lot with the migrant community in terms of helping them get their first jobs in Australia a lot of times, but also sometimes their second, third, and fourth jobs. And so we've got a bit of a unique mix where we have staffing solutions as well as the immigration and visa advisory services in our business.
Now, I've got to give you guys a big shout out at Jigs as well, because a couple of reasons. Firstly, some of our team in the research team, Grace has been supported by your team when it comes to becoming an Aussie and working with us. Secondly, yours truly and my family, you guys helping us. My dad's an Aussie citizen now, thanks to you and your team. And me, I'm very, very close. In fact, I have to brag about this one. Got the test, didn't even study, just got 1 wrong. Only 1. Guys, that's like over 90%.
Or was it how many stars on the Australian flag?
Because you see our Kiwi flag that we've got, it's confusing. We just got that 1 extra, I think, or we're missing one. So even that part I got wrong. But I reckon it was probably that. But I want to give a big shout out to you guys just to say thank you for just a super efficient process on that. But for those who don't know, this is a pretty cool fact. Yes, in that industry, you're in that from a business perspective, but you've got a unique partner on the journey as well with you in the business world. Talk to us about who you've partnered with and in terms of your agency and your business at the moment.
Yeah, sure. So yes, we do have a unique partner. So I'm a big cricket fan myself, and a couple of years ago, we were looking at different options for our business, and we actually, I bumped into Brett Lee at an event, and I started having a chat with him, and he's obviously very passionate about the industry as well as he's a global citizen, and he spent a lot of time in the subcontinent and obviously UK and Europe as well. And so long story short, he became our brand ambassador a couple of years ago.
Wow.
And so now he's our business partner and brand ambassador. We work closely with him on various different aspects. We were on a yacht with him actually last week, and he'd come down and, for the cricket season, he's here in Australia over the next couple of months as well. And very exciting to have him with us and supporting us as well.
A true Aussie icon, Aussie superstar, and a global superstar. Like
average bowler.
Average bowler. Honestly, I'm a huge cricket fan as well. Like, actually, we're heading off to the cricket this weekend, which would be awesome, India, Australia. But
Who are you going for, actually?
Who am I going? Oh,
Yeah.
see, now you put me into a tough spot. You know, I'm
The Citizenship Advisory Board might be watching this.
watching,
yeah,
they're
this
watching.
is Citizenship Advisory Board. I will hand down say I'm the dirtiest bandwagoner of all time.
So whoever wins then, eh?
Basically, right? I like one day you'll see me wearing an All Blacks jersey. The other day you'll see me like South Africa won the World Cup. Like, let's go.
Yeah.
And I'm like, where does South Africa come in my line, right? And I'm a bandwagoner.
When Tigers start to win the NRL, I'll let you know. You jump on.
Absolutely. I'll say like, oh, I was in Westmead when I first came to Australia. It was my first suburb. I'll try and find something little to relate to it, and I'll be like the best fan. So, yeah, political answer right there, man. I
Nice.
reckon this weekend, if my dad wasn't coming, I'd be like,
yeah.
Australia, let's go. But Dad's there, so I'm gonna go India. Let's go Team India. But we'll see how we go this weekend. But mate, yeah, just coming back to Binger. He such a humble dude. Like I remember you invited me and a couple others to the club event, and some of our team, Scotty Baldwin, actually went out to the cricket SCG and had some time with you and Brett Lee as well. That world of like just the business you're in, migration, Brett Lee's passion in that space. I'm interested to know. I know we're talking about your success in the portfolio and how well you've done that. How does Brett Lee see property investing, building wealth through property?
I knew that was coming. He's trying to pick up a lead. He's trying to pick
We're
up a
getting an
lead.
intro, right? We're getting an intro.
Yeah, just
InvestorKit.
introduce him to me too, mate.
How does he think of all things property in Australia? I mean, having such success as career, financially, business. What's his view on things?
Yeah, look, I'll be honest with you. I haven't had an in-depth discussion about property with him so far, but I remember we were waiting for it to go on stage at an event, and he did mention something about property being the way to go in terms of, building the future wealth. So I think, as with all celebrities in terms of their personal dealings and things, that's obviously closely guarded. So I don't actually know, to be very honest with you. But I think he's a big believer in property based on that chat. And I was having a chat to him about my portfolio, or he saw an article maybe that we got. And he's definitely supportive, I would say. So maybe worth a call and see how you go from there.
I reckon we've got a net session coming up together soon. Get my bowling back into action. Were you a bowler or a batter?
I'm a rubbish cricket player, mate.
Yeah? Adrian, do you ever get
once
into
a year?
cricket?
Once a year at Christmas. Classic catches.
Christmas?
Yeah.
Well, I mean, guys, I don't mean to roll back the time or anything into back in my day stories, but as a reps player back in the days, boys, quick bowler, teenager bowling, 115, 120, which is one of my highlights. But
I thought you were a basketball player.
I'm a basketball player too, but I actually, like, this is where I get like real, emotional. What could have been. I should have stuck with the stereotype. Hey, I think if I'd stuck with the stereotype of cricket, it would have gone a lot better than the basketball career did. But something about basketball.
You're a fan of
so much
basketball,
fun.
though.
I'm a huge fan of basketball. Basketball went all right though, but I was just the worst playing the best teams all the time. So it was like, it was one of those ones. It's like either get some good game time in a B team, and but then the pride kicked in, and I was like, I would rather warm that bench mightily on the best teams out, but just sit there on the bench. So my basketball career is probably as much as a warm-up jumper, maybe coming off after the game, but like not during the game, that's for sure.
At least you're on the team, mate. That's the main
that
thing.
was my thinking. It was be on the team, let's go boys, reps, all that sort of stuff. But now look, you'd actually already had 2 properties before we kicked off. But in 2020, something switched. So I guess I'd love to know, what was that flick of the switch that took you from going, hey, I've had 2 properties for many, many years, to suddenly buying 6 more properties in a couple of years in quick succession? What was that switch for you?
I think the switch was that I'd always thought about building a property portfolio, but it was a case of, at that time I'd starting the business, family things were happening, and we weren't quite ready to really go hard. And I think my personality is that once I go for something, I try and go for it 100%. And we weren't quite ready to do that. And if we started building slowly, it would have taken a lot longer. But I think when I started interacting with you, we were in a strong position. We'd set up a base. We've got a good amount of equity in our existing properties as well. And, income-wise, we're in a good and strong position as well. So there was a lot of lending availability from a banking perspective at that time. And I think that's where we then launched and, started the journey with you. And we ended up with 6 property purchases in a short space of time. there was also an element of, we started buying, I think, just before COVID. And what happened was that once we bought those properties, we were then able to get a quick 30, 40, 50% boost in a short space of time, which then meant that, the amplifying effect of the equity growth really was fast-tracked as well because of that boom that happened during COVID. And then that allowed us to, keep building from there.
Now, 2020 was an interesting time because that was like, when we're kicking off and everything's going on, business uncertainty, there's border shutdowns. I know you talked about going hard when you commit to something, but you're also in that business space of, job skills, coaching, migration, these key areas of industries. What was it going through your mind at that time with all this happening on the world and there's chaos happening and you're like, no, I'm still going to go for it. I'm not going to play it safe.
Yeah, it was a little bit of a unique situation because normally people would think that COVID, job search, the market is going to be really tough. But for our specific business, it actually ended up being a good thing, as with a lot of people in the recruitment industry, because what happened was that offshoring had been impacted. So India and Philippines were heavily impacted. And therefore, a lot of jobs that were originally outsourced or taken offshore had to be brought back into the country. And at the same time, there was less people physically coming into Australia. So from a job market perspective, during COVID in Australia, it was a strong position. If you're physically already here, you were skilled, and the industry actually ended up going upwards rather than downwards, which was an opposite effect. Plus, the government also chipped in with their subsidies and various other things. So I looked at it from a perspective of, yes, there's doom and gloom in the economy and things like that. But from our personal perspective, we were relatively strong, and COVID actually had a positive impact on our business at that time. So we were able to capitalize from there.
Your first couple of properties, Aman, were in the backyard. Actually, funnily enough, in the same building, you've got two properties, which is a pretty unique part of the portfolio, right? But multiple properties across New South Wales was the start of your property portfolio before you then went into investing borderless, that too across 4 states. What for you was the comfort piece that was ticked off or feeling like, okay, now you can go borderless? Or was there anything holding you back from going borderless when you first kicked off? I'd love to know more about that.
Yeah, look, I'll probably talk about the first one that we purchased, which was in Adelaide. About, I think, 550, 600K was the first purchase that we had. So that's where, we were basically looking at going borderless at that time and buying sight unseen. So that was probably the one where, as anything, you do something new, there's a few nerves, you're not sure. And so we were always looking at that. But, the thing these days with technology, it's so good, look at, Google Maps or satellite images, and you can get an idea not only of the property, but of the streets around it and things like that. So I think now it's a lot better than when we first started. It was a bit of a gray area. But then what happened was, I think your team, they were on the ground, they took videos, they looked at the surroundings, they shared in-depth sort of analysis on what they were feeling and what the area seemed like, and then the property, walking through each and every bedroom and all the facilities. So I think, once we got those videos, the inputs, the data, the nerves really just went away. We were pretty confident in terms of what we were purchasing and where we were purchasing it. And yeah, so it kind of came together at that time.
Awesome. Now, funnily enough, on that first property, I just remembered then, that property, I would say out of the 6 that we bought you is probably, I would agree it's the best performer in like percentage wise. You bought it for 550. It's worth almost $1 million today, roughly $1 million. In fact, I bought the property for myself a couple of years after you. So you bought in 2020. I think I bought end of 2021 there. I always do that, by the way. You've probably noticed that. I always buy like after my clients, like I make sure you guys get in there first, have a few, and then it's like I buy after. And funnily enough, my last 4 or 5 purchases, the ones after have not only been after, but they've been when someone said no, and it was like someone had to back out of a deal, or they had to pass on the deal for some personal reason. It wasn't because like they didn't like it. It was just like some personal reason came up and something happened. It's like, I have to get out of this for this. I was like, okay, I'll take it, because there's not enough time for it to go to another client afterwards to go, hey, do you want to consider this? This is what's happened. So it's funny how that's happened. But coming back to that property, it actually is the one that doesn't look the prettiest out of all the ones you've purchased too. How's that changed your view on how things look and feel versus how they perform?
Yeah, look, it's you're right. It's about, I think, a 30, 40-year-old property, and but full brick, really nice. And even though it's an older property, like I think the presentation and when you look at it, it's really, crisp in that sense. So I think, I know some people like to buy new properties for tax reasons and depreciation and all those things. But for me, it's a case of, yes, I mean, obviously those factors come into play, but the land value, the quality of the property, how it's maintained. And I found that some of the newer properties that we bought actually ended up having more maintenance.
See, that's
issues.
interesting, right?
Yeah, whereas, for example, that property in Adelaide, I mean, it's hardly got any maintenance. It's had the same tenants for the last maybe 4 or 5 years. They actually reached out to us. They want to try and buy the property because they're so well settled in it at the moment. So, so I think for me, it's not so much about the age of the property. I think it's just more about the quality of the build and all those other factors that come into play.
Absolute big myth busted. It's so important for people to recognize that like the age does not define maintenance. I've had my property that's had the most maintenance in my portfolio is a 2004 build. So that's in the 2000s. The property with my least maintenance, funnily enough, is built 1920s in my Central Coast one, I'd say. And then maybe my 1940s Bendigo one is pretty low maintenance. And even my 1980s Adelaide one has no maintenance.
I got to say it.
You know
They don't make them like they used to.
Yeah.
I had to say it.
Yeah. That's a tagline, quote line, I'll chuck it in there. But I definitely agree that like, even though, yes, depreciation, feeling modern, all that stuff's there, but the properties mostly in my portfolio that were older, 1920s to 1980s, least stuff happening, which is interesting.
And ultimately, I mean, you have to be a little bit unemotional as well. So, and I think that's the one thing that we learned over the years that, we're not going to live there. It's not based for our lifestyle. Like, we would never really live in a 5-bedroom place ourselves. We don't need that bigger space. And so I think that's where you need to take the emotion out of it and look at it from a, what is the demographic of the area? What's the demographic of the area usually demand? What would they pay a premium for? What are the things that are important to people in, say, Adelaide or Melbourne or, wherever regional area that you're looking at, as opposed to what being a Sydney sider in the city, what's important to me is completely different to what's important to that demographic. So I think that's the one thing that I learned.
Aman, having a review of your portfolio, I mean, firstly, congratulations in terms of what you've built here, but, you've got a portfolio of 8 properties. I think you're sitting across 4 different states and a portfolio value of 11 million. Is this what you kind of originally envisioned your portfolio would look like from the start, or has that kind of evolved along the way?
Yeah, it's definitely something. I had a goal, not maybe a specific number, but the fact that I wanted to build a large asset base, because I believe that's the way for long-term wealth. Like, you need a good asset base that's going to then work for you over the years and in the long term. The figure itself was not something that I was very fixated on, but it was a case of that I was more fixated on the value of the properties as opposed to the number of properties. And I think initially me and Arjun had that chat in our initial strategy sessions as well. And we agreed on that strategy that it was more about, quality and the value rather than the quantity of properties. And we started building from that point of view.
Yeah, awesome. And it's a good point to note because you do have, you've got your portfolio, and don't get me wrong, 8 properties is a lot, and I'm sure that it's a lot to manage and take care of, but it's also not sitting at, 15 or 20 properties, which is what it could have been. So what made you sort of go down, this path rather than chasing, multiple smaller properties?
Yeah, I think it was just a case of, one is how much can you borrow, how much can you afford, also the serviceability side as well. So for me, I don't think there's necessarily a right or wrong strategy. I think it just depends on your specific situation and what the banks will allow you to do, basically, to a large degree. And if that means that, you can afford to only buy, say, 300 to 500K properties that pay for themselves over a long term and you buy 20 of those, then I think even, that's appropriate and that can work for some people. But on the other hand, if you want to buy properties at 1 to 1.5 million and have a small number of those and you can afford to manage that as well, then, it just depends on your personal scenario, I would say.
Yeah, 100%. And, I was talking to Arch before just around, the properties that you purchase, and they are, I guess a little bit different compared to what we typically purchase. There's something, 5 bedders.
They're very different from we talked about this unique approach. So Aman, he used this word like, I wanted X factors repeatedly. It was one of his things. And I used to not believe in that strategy going back pre-2020. until he kind of said that a few times, and I decided to look into it further. It doesn't make sense on all properties, but it makes sense on higher valued properties doing it this way. And what it was executive homes, I'll just label it that, in middle ring suburbs. If you have a big budget, and this isn't suitable for everyone, this is like when you're operating that 1 to 2 mil budget or beyond, if you go all of a sudden to the inner rings, what ends up happening is those homes in that bigger budget, they're actually like entry-level homes on those inner budgets, on those inner city rings. And then you have this kind of subpar looking house in a good piece of land closer in, and the yield's really poor, like really, really poor. And so you're just getting smashed with cash flow, but you feel good from a prestige that you're in really, really close. And then you're all of a sudden trying to do that whole worst house in the best possible area, and the numbers aren't quite right. Then you have the outer ring markets, right? Where like Aman's point, you can get 10, 15, 20 in his budgets and position of strength. But then all of a sudden, it's a lot to manage, a lot to do. And then if you come to the middle and you just kind of still get your normal home, okay, still the same. There's nothing special here. But when we found we got like those inner/middle, like mainly middle ring, but you got the executive home, the 5th bed, the 3rd bathroom, the split level, maybe the extra study, the cinema room, something. We found 2 things happening. It wasn't inner city prestige land that the dollar per square meters was just wild. And it wasn't like a normal rental where you got the 600 to 800 a week. You could test it and be like, there's nothing like this. Should we try 1,200? And in fact, like one of Aman's properties was super high yielding, even at a 1.5 mil, 2 mil value today. Like it just shows that there is this little part in the market where if you do have a bigger budget, closer to like 2 mil in today's terms, you can start to target these properties where you can go, I'm going to get the nicer property that someone wouldn't necessarily build out far, but it doesn't exist in because it's too big for that type of land. And so it's this middle ring executive home that offers you higher yield against the suburb averages. And that was an approach we took. So what drew you to that strategy outside of the numbers? Because I guess I've talked about the numbers side of it. Was there anything that drew you to that strategy outside of the numbers itself? Or was it just purely a numbers play? I wanted efficiency, less is more for me. What was your thoughts?
Look, it was largely a numbers play. And I think the way that we looked at it was that we have this property, at worst, it's going to rent at this level, which is, say, the normal level within the suburb. But because of the uniqueness, there's a potential for that property to rent at a much higher level as well. And that was the risk that, we knew that this is the best case scenario. The worst case is still the normal. And I think, we went for those properties that had that potential. And, some of them lived up to that potential. Some of them, still came back as normal. But the ones that lived up to it suddenly have a high value asset where the yield is much higher than, what an asset of that value would do. And I think that's where, we kind of talked about that tactic.
Loving the show and keen to invest? Well, book your free discovery call and we'll actually walk you through how to build a high growth portfolio without all the guesswork. Just jump onto the link in the show notes or visit investorkit.com.au to book your discovery call. And now let's get back into the show.
I mean, just looking at one of the properties you purchased for 1.175, when you originally purchased that property, it was renting for 900.
Which is
now,
solid. That's solid.
Yeah, it's solid, but now it's renting for 1,250. So that's pretty good. But how important to you is it that you don't sacrifice yield for quality?
Yeah, I think it has to be a mixture of both. Yield is important, especially if you're going to buy multiple properties. If you get your cash flow in trouble and you can't really afford to keep buying, then you have to stop at a certain point, right? So I think yield is critical, but of course, the quality of the property, and that's why we engage with Arjun and the team, right? So we always had that peace of mind that when I went to Arjun, and his team, they're always doing all those checks, and we're not going to buy an asset that is not of the highest quality in any case. So I think that was one of the key reasons why we've had this relationship for so many years, and we leave the quality part to Arjun to work out for us.
Yeah. Well, sitting at 11 mil worth of assets, even on a conservative growth rate, 5%, you're looking at 550,000 a year compounding, growing your wealth.
Massive.
How important is that to you as a business owner to have your business generating the cash flow, but then have the wealth building in the background?
Yeah, look, it's really critical. To have that base, and having the assets that, do have the capital growth over time. I think it's critical for peace of mind and understanding that, overall from a holistic perspective, the wealth is growing. So I think, it's been a large part of the reason that I am able to take a bit more risk and able to invest a bit more in the business, because I have this base that I've set up. And so that's a big factor for sure.
Well, mate, you've always, credits to you. You've always had great success from your corporate career to then your business. You've earned well. You've done well financially on that aspect of your growth in career. And then I think of many other high income and professionals and business owner professionals, because there was a point in your investing journey where you had just the 2 properties for many, many years. What do you think holds back many other high income professionals, business owners from really like scaling up their wealth when they're also in those strong positions, but they don't? Because you're on the other side now of that. What do you think holds others back?
I think it's it's hard to talk for everyone, obviously, but it's just a mindset thing as well. So a lot of people, they like to have cash in their bank and those things, and they feel that with property, it's not always a positive net at the end. Sometimes there is that gap there, and they're risk averse on that side, or sometimes people are risk takers in certain areas of life and not in others. So I think it's a really tricky one to say why it holds back. Some people, they like to do more in the share market or crypto these days, and as opposed to property. But for me, I think property is the vehicle that I would say is the most consistent, stable for long-term wealth generation. And it's about having that 5, 10, 20-year plan in place, that if you invest in property, the right property, and you keep at it, in 10, 20 years, you're going to be in a really strong position because of leverage. And that's the way that I've always looked at it. And for me, the volatility of the share market or crypto, that's not something that sits well with my personality. I prefer the more longer term game from that perspective. And that's why I've gone down the property side.
You know what you've done there? It's made me just think of like how you simplified it to 2 parts. It's like really that long-term view of investing and what it's done in the past. But then secondly, you're turning it into routine. I feel so many high-income professionals and business owners, they don't look at routine because they're so used to like the roller coasters that come with business. And they're so used to, I'll wait until I hit this and then I want to hit a home run. I'm going to buy this one asset and it's going to do everything for me. Or I'm going to wait until I can buy this something crazy. And then it's like so much time goes in this roller coaster of ups and downs and changes in emotion. Now, you've had, like any of us in business, have had quieter years. That happens in business. When those years, if applicable to you, has happened, how has that property portfolio made a difference to you in those quieter years?
Yeah, definitely. So the thing with the property portfolio is that because it's it's growing in the background, like say whether it's 5% overall or 10% overall, or if there's a big boost, then that equity access that you have allows you to have those buffers in place. So when you do have the quieter years and things happen, there's government regulations or there's external factors that come into play, and so that allows you to have that buffer that if you do need to utilize a certain amount of cash from the property portfolio, then you can go and access that cash. And again, which goes back to what I was saying earlier, then that allows you to take more risk, because in the back of your mind, you know that you have that pool of equity available that you can utilize if required from time to time.
This is something that people actually have a big misconception on. They think that when you get lots of debts and properties and all that sort of stuff, like you've got these golden handcuffs. I actually think it's the opposite. I think when you get into property portfolio and you have something compounding, in your case, conservative 5% equals $500,000, right? That's like a top 1% household income, right? So you've got a top 1% household income growing every night as you sleep. And in each year, it's getting that sort of return. Like people don't recognize that, yeah, sure, you might have had to acquire the debt to get to that level. But when you get to the level and it's doing that, debt's not constantly rising. Rents are rising up. Debt's devaluing with inflation. Tax has deductions, but the assets keep compounding away. And that to me is so powerful, because when that happens, if you have 2 mindsets though, it can go either way. But one mindset is oh no, I've got so much debt and this is really risky to me. But the other mindset is I'm going to take action. I'm going to make decisions because I feel good that will carry me forward. And that's definitely a way that you took. So, I mean, just so happy to see you look at it that way, because I see so many others who haven't gotten there yet and don't get there because they see it the other way. And so that's something special from a mindset perspective.
So I think when you access equity on a property portfolio, it's a hell of a lot cheaper than getting a business loan. You know, you've got way more flexible terms, much cheaper rates, really long loan terms, and it's just more flexible. Whereas you look at a business loan, you get 2 to 3 year loan terms, double, sometimes triple the interest rate. So yeah, you're definitely right there, accessing equity to fund cash flow in the business.
Cool. Aman, for yourself, you've purchased your first 2 properties. Was that by yourself?
Yeah, that was basically where we were living and things like that. Yes.
Gotcha. And then you went on the journey with InvestorKit, purchasing 6 properties, which is quite a few there. What were there any sort of key moments throughout that journey that you really saw, I guess, the power of having the team behind you?
Yeah, definitely. I mean, I think there was a lot of key moments across the 6 properties. So often I was probably one of those clients that, I'd bug Arjun, I see this property, how about this one? And then he would come back and say, no, there's these power lines behind here, or there's public housing nearby, or there's too much retail shops in that area. So these were things that, as a non-property expert, like you never look at those things yourself, and, you're not really going to look at what's 2 streets down or what's in the radius, or sometimes there's a lot of supply being planned for that area and vacant land and things like that. So, there's too many to count, but ultimately, you don't know what you don't know. And that's what, people ask me, right? So, you're going to a buyer's agent, you're spending money with them, and it's obviously something that, they ask the question, is it worth it? Is it not worth it? So for me, I always look at it as an insurance. So say if you're, spending, let's say, $1 million, right? And you have to pay a very small percentage of that to ensure that that $1 million is then going to, help you in the long term, then for me, that's a no-brainer. So that's the way
He's listening to my phone calls. He's listening to my phone calls. The amount of times I've said to someone, it's like an insurance on your investment. Like, mate, smart man.
I mean, that's a real powerful statement you say there, because when you look at it that way, it just changes the game completely. It's like we're looking at it from a perspective of, I could just go with this $1.5 million decision on my own, but have no coverage for it. But then what that's done for you, especially on our phone calls, like that's a really, I really appreciate you bringing that point up. Hey, don't do this one. The power line's there. Like the amount of moments where we had those moments, which is really cool to reflect on, because then that made me feel so good, because we get nervous sometimes when the client calls us up and goes, hey, I found something. I'm like, wait, did you find something and we didn't? This doesn't seem right. And I'm humble to admit that. I'm like, I want to always beat you to it. I want to find something first. I want to get the off market. I want to find something on market faster than you can. And look, clients don't typically send us stuff, so it was new to me as well. But then when you sent that to me and I was able to look at it and go, I am about to back my process here. I know something's not quite right. Otherwise, I would have sent it to Aman. Look at it. Power lines right behind, main road, cemetery across the corner, on a roundabout, too close to a big substation, like all these things. And because me and you started quite early in the journey together now, 5+ years, having those moments with you actually really set up InvestorKit's success too, because those moments made me look at many of our coaching moments with our team to show them the importance of speed, our values of diligence, like the values of clarity, communicating why. Like really, a lot of our values are built off all of these moments, which is like looking back in time and going, no, we could purchase every property for our clients 2 to 3 times faster than we do. Clients would love us for it, but they would hate us many years on when they go to resell. They're looking at comps around them and they go, oh, we'll sell this for 2 mil. Seems about 2 mil. Agent comes to them and goes, sorry, but the big major power line right behind you guys. And this power line is going to upset people here. And we think it should be maybe 1.7, 1.8. And all of a sudden, like you'll come back to that moment. So thank you, mate. I appreciate those little moments we had together, because that also made me like set some firm values, set some firm commitments, and also stay committed to the whole, like, hey, I'm glad we're saying no, and I'm happy to take longer. I'm happy to do the right thing here, because look how it's turned out as a portfolio, but also that insurance policy. I come back to that moment because now you can go, no, I feel good. All those things were checked. I feel good. We've got those things. So I know it's not a question, but I just want to say thank you.
Thank you for sure.
Mate, we want to wrap up with this particular part in terms of a question, which is other business owners out there who are earning well, doing well, but they may be on the fence now about property investing. What do you feel are the things that they should do when it comes to getting on the journey of property investing and building some wealth and the momentum that you've built today?
Yeah, so I have this chat quite often actually because some of my friends are more into the capital markets and other things as well. So the comment that I make to them is property investing, and I guess residential property investing in particular, it's such a big part of the Australian economy and the way that the market works, that if residential property market has a big sort of event where it goes down, probably everything else is also going down at the same time. So it's going to be something that it's going to not just be you then, it's going to be everything and everyone.
We're all going down together.
Exactly. Like
problems.
like in COVID, like the share market went down and, people lost millions and millions, but the property, went stable, right? It went up actually. So, that's where I look at it from that perspective, that for me, it's something that I'm investing in, something that is quite secure. Nothing is 100%, but for me, I feel very secure in that side. It's a way for you to build your long-term asset base. So again, wealth is generated by building your asset base as opposed to, just having the income. And for me, property is the best vehicle for that.
Yeah. I think it's worth talking about the importance of building a team around you as well, because obviously you're a business owner. A lot of business owners have the same excuse. Yeah, I'm too busy. I got too much going on. Well, that's why buyer's agents exist, because a lot of the work is done by them. You're just making the decisions, but it's all neatly packaged and presented to you. So could you talk a little bit into that point?
Yeah, 100%. So as you mentioned earlier, like all our properties are basically interstate across 4 different states. And there's no way in the world that we would have bought those properties without Arjun and InvestorKit's team's help. So basically, without Arjun's help, like we wouldn't even view the properties, right? Like all of them were bought sight unseen, I think, pretty much.
I still haven't seen 3/4 of my own properties.
But you just have that confidence because you know that someone's there, someone's viewed it, someone's seen it. And then since then, we've actually seen all of our properties and we love them, right?
We got an excuse to go on holiday, right?
Yeah, exactly.
I don't think it's tax deductible anymore.
No, not anymore. They used to back in the days, back into the golden era of visit my property to change my light bulb.
So, I mean, look, again, having that confidence in that team is critical, right? Because then I know, for example, if Arjun is recommending a property, they've already done all the checks. It's a good quality property. It's in a good street. It's something that, is going to grow over time. And if you don't have that confidence, one, you're not going to trust the process. And if you don't trust the process, then you have to invest your own time in it. And like you said, business owners, they're short on time and they don't want that. They want to pay an expert to do what the expert does best and then hopefully get the returns. And I think that's where, Arjun and team come into play.
So, Aman, just balancing the business world and your property investments, how did you choose? Like, I guess it's just kind of knowing where your business is at, where your property portfolio is at. How do you choose between what to focus your time on in any given year?
Yeah, look, a lot of it is basically driven by outside factors. So, for example, if, in our business, it's, usually that December, January time, say from a recruitment industry perspective is much slower. So that gives me time to then, unwind, but also look at other areas of, my overall portfolio and what I'm doing. So, so at times you get those breaks and, you get those weeks in between where you can look at other factors and optimizing them. And I think, that's really critical. Like you need to keep looking at it. You can't just kind of close your eyes and forget about it because things are constantly changing. There might be an opportunity that you didn't think of, or, there might be some restructuring that you can do that's going to put more money in your pocket. So just whenever you get those opportunities, just looking at it and making sure that it's as optimized as it can be.
Awesome. Thank you, mate. Thank you so much for tuning into this podcast. To hear more like this and to help us spread the word, don't forget to leave us a rating and follow along for our next episode.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Game over.